Yeah. What is up, you guys? It's your boy Lawrence, and welcome to yet another video. So it's been a blue Monday. I took a couple of long positions in GA in the morning. I just thought I should take you guys through the trades. So yo, man, I'm a day trader. I like looking at my analysis from a daily time frame just to get a daily bias. But there was nothing going on in the daily time frame, so I decided to start on the 4 hour. So as we can see on the 4 hour, I noticed some sort of like a descending channel, and I went on to mark that. And I went to the lower time frames to look for Wyckoff schematics, like accumulation or redistribution. And I was quickly able to notice sort of like an accumulation phase going on. Other people would like to refer to this as an inverted head and shoulder pattern, but I like sticking to Wyckoff schematics. So as we can see here, we basically had a preliminary supply with a seller's climax, secondary tests, secondary test in phase B, and a break out of that channel. And we also had a breakout of this very significant resistance zone. So I was basically looking to go bullish for most of the day. But I just felt like I should also look at the market maker patterns to basically get more confluences to supply my idea of going bullish for most of the day. So I was able to clearly spot some market maker patterns. As you know, market makers like going in the same direction for about 3 levels before making a reversal. So I was able to identify this as my first level according to the bet the market maker strategy. Then I also took this as my second level of rise. Then I noticed we're literally in the third level of rise. So most people who use market maker would like to start looking for short positions around this zone. But then I noticed, looking at the larger time frames, that we're yet to make an information like this. So I was literally waiting for the second leg of the information. So I just felt like I should literally go bullish, go long to form the second leg of the information. Now I didn't stay on my 1 hour time frame because I wanted to look for basically more confluences, because I was also looking at my moving averages and all that, and they were basically supporting a long position. Looking at the 1 hour time frame, I just wanted to zoom in and start looking for areas of supply and demand. And I looked at this sell before buy candle, which is a very strong institutional demand zone, and I went on to mark that right here. So I was basically planning on going long the moment price comes back to that supply zone. That's basically what I was literally waiting for. So I then went down to my 15-minute time frame around 6 in the morning, 7 in the morning to look for my actual entry. I like catching sniper entries, so I have to go down to a lower time frame. Looking at the lower time frame, I started off by marking my Asian session because I basically followed the intraday market maker cycle. So I marked my Asian session from around midnight to 7 in the morning. That's right here. So ideally, I would have wanted price to literally make an aggressive movement from here and then looked for a W formation or M formation during the London session. But I noticed that price already made a very aggressive movement during the Asian session. So I assumed that this was the first leg of the W formation and we're basically going to come back for a second leg. Let me just draw what I'm talking about this way. Then up, then it's up, then it's up. So yeah, so I was basically looking to go long around this area because I just felt like it was also a test of the lowest points of the Asian session. So the moment we came down, all I had to do was to go down to my 5 minute time frame to start looking for signs of a reversal. So I went down to my 5 minute time frame And the moment we started approaching that zone, it was somewhere around here. We're basically in a series of forming lower highs and lower lows. We're going down, we're going down. Then the moment we went up and formed this candle, I basically just put my buy stop above this wick right here. So this was my entry right here. And I put my stop loss just below the low of the day. So this is basically where I decided to take my long position. And my take profits, judging from the supply zone I found on the 1 hour time frame, was somewhere around this area. And my stop loss was somewhere around here. So I was basically only risking about 16 pips, but the returns were about 57, which is quite a good risk to reward ratio. It's about 1:4. So this was basically the trade I took during the London session. And I basically just waited for the New York session to look for re-entries. That's basically what I've been doing the whole time. So let me show you guys the re-entry that I took during the New York session, because I feel like that's also quite important. So if you look closely, if you're well versed with supply and demand concepts, you can see we basically had a rally, a base, then a rally. So this is basically a supply zone according to supply and demand. So I also decided to mark that certain region because I felt like it's very important as well. So I marked this base right here. So during the New York session, I just wanted price to come back and touch that same zone, and then I start going bullish. So the moment price came back to that zone around here, I didn't take the trade because this was before the New York session. So I knew there was still a possibility of a break below this point and a trend continuation to the downside. So the moment it went up and eventually came back down, I took this as my W formation. Let me show you guys what I'm talking about. This was basically my reasoning, which is why I decided to go long again. So I basically just looked at the behavior or price around here. As soon as I got this pin bar, I decided to go long, and I put my stop loss just below the supply zone, the demand zone, sorry. And then my take profit. Let me show you guys what my take profit is. Let me show you guys what my take profit is. Let me just move to the right side. Oh, fuck my life. Let me put this thing back. Oh my god. Yeah. So yeah, like I said, I have to restart marking all this stuff. Oh my god. This is why I don't like trading view. So basically, I'm saying this is the base that I wanted to use as my supply zone. So I decided to mark that base because I just felt like it was very important um, to take note of before I actually execute my trade. So I went on to mark that zone. Like I said, I was literally just waiting for price to come back to the same area. So the moment price came back down and formed this sort of patterns, I knew this was an accumulation. I literally took my trade right here after this pin bar, put my stop loss just below the lowest point of the supply zone. And yeah, I'm currently in the trade. I'm just waiting to see how it's going to turn out. But let me just show you guys exactly why I took it. I took it right here. My stop loss is somewhere around here. And then I put my take profits right here. Now, the reason I put my take profit here is this is a very strong level of demand and it's still fresh. As you can see, this is an institutional buy before sell candle. So it is a very strong demand zone. So that is where I'm planning on taking my profits. But also, this is also 33 pips, which is a lot, which means I can bag around 80 pips just for today, calling it a blue Monday. So yeah, man, this is the trades I basically took today. It's been a blue Monday. I hope you managed to get something from the video. Be sure to drop a thumbs up. If you like these types of videos, just make sure you comment, you share, you subscribe to my YouTube channel. Although I don't have one, but it's coming soon. I'll drop the link on my bio as soon as I got one. So yeah, I'm currently waiting to see how price is gonna behave. Even if it doesn't go my way, I'm only risking literally 4 pips, so it's not really a train smash. I'm just waiting to see how this is gonna run. But I'll give you guys an update later. Thanks a lot. Shout out.